It's not the headphones on it. Sorry guys, apparently there's no sound. Get it back going here. Okay, so yeah, like we said, the yen moved to its weakest level since 2008, which is really significant. I think markets are kind of returning back toward normal. We've seen some of the odd movements, I think, in the commodities markets the last few years, specifically in the gold market, on the back of some of the data. And also kind of in the treasury market. So until we start to see a real hard push one way or another, I think we have to kind of see whether or not the tapering is, how much of the tapering is actually priced in. Okay, there's no corporate action out today. Light day as well for market data. We had industrial production out of Japan earlier. It was better than the prior number. We have CPI out of Spain. We've got the employment numbers out of the Eurozone at 12, and then we've got PPI numbers in the States at 3:30. So very light day today in terms of market data. All right, let's jump into the maps. Okay, the first one I'm going to look at, I already got the chart up there, is the US dollar yen. You can see there, obviously we really made the breakout kind of all the way back to 99 out of this perfect little wedge formation. This morning we kind of narrowly took out highs up around 103.60-ish. And I think, obviously really important to see this continue to play out. Like I said, this is a big thing in financial markets. This is a return to normality. This is showing that people are willing to start to put risk on again. They're putting on the carry trade here. You're starting to, really when the yen started to show such incredible strength was at the start of all the real turmoil. And the fact that this is starting to weaken back out, in my mind, is a very positive sign again for equity markets, along with what we're seeing in the euro as well. So, let's keep an eye on this. Every time we see this thing weaken, I personally think it's a positive for equity markets. And we may be able to start to see some of the correlation to yen weakness and to equity market strength that we saw in years prior. So just keep an eye on that. CFR, I'm going to show just simply, yesterday we did trade below 100 for the first time on a closing basis since going all the way back to beginning of October. But kind of coming back into some sort of trend support here. It's nothing significant, but if you're looking for areas to nibble, maybe not such a bad little level to have a nibble in CFR. Naspers had a monster correction yesterday, along with a lot of stocks in the index. 980 is really a major support here. This is where we broke out from. We closed at 992, considering we were at 1060 the day before. I think this is a real correction. Obviously, we're going to see this thing open up considerably this morning. But if we do get another pullback the next day, 2 days, obviously we could see the selling come back into the Aussie today. 980 is the level. I think it's probably, in my mind, definitely worth a nibble down around 980. It also comes in nicely on a little bit of this recent trend support at 980. So this is going to be a potentially a good opportunity if we get the chance to nibble at 980. Look at MTN here. MTN also, I'm going to actually jump back a little bit of a 2-year. I know we've shown this chart a lot of times, but just in case you're trying to figure out your timing, this is definitely on trendline support. We've touched so many times on this trend line now, it's really becoming quite important. And we did it, so much of it in one day. So I think MTN anywhere around the sort of yesterday's closing levels will probably be a decent little opportunity. RMI, also looking at this on a 2-year chart. You can run this trend line literally to 2 years ago, and there are 5 or 6 touches, or 7 touches maybe on this trend line. Very, very kind of consistent pattern out of the stock over the past 2 years. And so if you're looking to nibble on something, this might be one of the ones. It's also getting close to its 200-day, which it hasn't actually dropped its 200-day once over that time period, and hasn't even properly touched it. So might be a place to have a nibble here. Old Mutual, also going to look at this on a 2-year. Now, Old Mutual broke out beautifully out of this wedge formation, and we're coming back now to test support out of this wedge pattern. I think this is between yesterday's closing price at 31 and down around, call it 29.90 or 30, which is where the 200-day moving average is probably where you want to take some risk here if you're looking for a long play. I think this chart is very bullish. I would say it's a great buy and support. You can see this one also has only touched this 200-day once, and that was back in June. In the past 2 years, if we were to get a little bit closer here, closer to 30 Rand, I think it could be a great opportunity to nibble on some more mutuals. And then the last one I'm going to show is Barlow World. And Barlow World coming back down to sort of to test what has been multi-month lows here. This is a stock where you can see this huge green bar here when they had earnings. Really, it's just keeps getting punished like yesterday on these really low volume days. I find it really interesting. There just hasn't been a whole lot of support that's come in, but if there is some support here at a level, I would say it's around yesterday's closing levels. We did test the kind of bottom end of that around 89.50 yesterday, which is really the lowest levels of the past 3 or 4 months, and I think it's probably a decent level there considering their recent earnings and the setup technically. That's it for today, guys. Thanks a lot.